Well, the trade war conflict between the U.S. and China has been going on for about a year now, creating a lot of uncertainty in the market. So on a day like today, you're probably wondering what to do now and how should you be factoring in the trade dispute in your portfolio for the longer term. We're joined by Sandip, Bhagat, who is the Chief Investment Officer over at Whittier Trust. Sandip, welcome. Nice to have you here.
Terrific.
You are one of these people who think that this could last, quote, for several years or maybe even a decade. If indeed that is the case, how are you advising clients and what should our viewers do to factor this into their portfolio?
So first of all, let's reset expectations. If for a moment we thought that there would be some convenient, miraculous, magical end to this trade war, well, that thought needs to be abandoned. We are in this for the long haul. This could last a few years, even a few decades, because the divide is not about trade imbalances. It is cultural. It's about economic dominance, technological dominance. And so the first thing investors need to get accustomed to is that this is here to stay. With it will come a fair dose of uncertainty. They need to price that into the volatility of the asset classes. They need not to get spooked by bigger drawdowns.
Okay.
So stay committed to equities, but with the realization that they are riskier now.
Now, I look at a list of companies that you think you consider quality, that you would advise people to go to. There's the Disney, Microsoft, Google, Amazon, Visa. But, you know, to some degree, all of those companies do have an exposure to China. They will be affected by the ongoing trade dispute. So I'm curious why you pick companies like that necessarily.
So the common characteristics of all the stocks that we mentioned here is that these companies have superior business models. They've shown the ability to generate steady, sustainable cash flow. They have a significant competitive advantage. They have a big economic moat that protects that competitive advantage. They're capturing on secular themes like cloud computing, e-commerce, mobile payments. So you are right. Right now, the macro theme of the trade war is so dominant that nothing is spared. Every single stock will be affected by it. But the high quality of those companies will help them withstand this better. And just think about this. What a wonderful vehicle to grow wealth over a long-term basis. It just compounds without us having to trade and suddenly get into cyclical stocks or defensive stocks. They are tremendous vehicles for building long-term wealth.
On that good advice, we will leave it there. Sandip, Bhagat with Whittier Trust, thank you so much.